Welcome to the FinGlam Finance channel. In this video, we will be reading and commenting on an article that we found very interesting. Feel free to leave a comment. Let's start reading the article. FTX is getting closer to a potential fresh start, as CEO John Ray reportedly invites potential investors to finance their new venture. The bankrupt cryptocurrency exchange FTX is making progress towards relaunching as a completely new exchange. As per a report from the Wall Street Journal on June 28, FTX's restructuring chief, John Ray, stated that the company has initiated the process of seeking interested parties for the relaunch of the FTX.com exchange. Sources familiar with the situation mentioned that the firm has been engaging in discussions with investors regarding financing for this potential relaunch. Among the interested parties is blockchain lending company Figure. Cointelegraph attempted to reach out to Figure but did not receive an immediate response. Reportedly, potential bidders have until the end of the week to submit letters of intent, which outline the terms and conditions of their participation. It is worth noting that current FTX creditors may have the opportunity to receive a stake in the reorganized crypto exchange, along with other forms of compensation. Instead of adopting a name like FTX 2.0 or any variation of its original name, FTX is expected to rebrand with a different name altogether. Overall, it seems that Ray and the rest of the FTX team view a fresh start as the best approach to ensure that creditors are repaid in the most favorable manner. FTX's legal team previously stated in April that they anticipate completing the launch of the new exchange sometime in the second quarter of 2024. According to a recovery process report from June 26, FTX still has a significant shortfall of nearly $2 billion. The efforts to recover these missing funds have been further complicated by allegations of customer asset misuse by key leadership figures at FTX. Daniel Friedberg, a former regulatory officer at FTX, who is believed to have played a role as an unnamed party in several legal proceedings, was sued by FTX on June 27. The lawsuit alleges that Friedberg paid hush money to silence potential whistleblowers, in addition to approving a series of fraudulent transfers and loans. The report on the missing funds also revealed alleged investments in venture capital firms, a Bahamian real estate portfolio worth $243 million, and numerous donations made to nonprofit organizations. This was the text of the article, and now we will be commenting on it. It's great to see FTX making progress towards a potential relaunch as a new exchange. CEO John Ray seems determined to explore financing options and attract investors for this fresh start. The involvement of blockchain lending company Figure adds an interesting dimension to the discussion. It's worth noting that current FTX creditors might have an opportunity to participate in the reorganized crypto exchange, which could be a positive outcome for them. The decision to rebrand with a different name instead of sticking to FTX 2.0 or a similar derivative shows a commitment to creating a new identity. The expected completion of the new exchange launch in the second quarter of 2024 gives us an idea of the timeline involved. However, it's concerning to hear about the nearly $2 billion hole in FTX's books. The alleged misuse of customer assets by key leadership figures further complicates the efforts to recover these funds. The lawsuit against Daniel Friedberg, a former regulatory officer at FTX, raises serious allegations of hush money, payments and fraudulent activities. These issues must be addressed transparently to restore trust and ensure a fair resolution. Overall, FTX's journey towards a reboot appears to be driven by a commitment to fulfilling creditors' expectations and achieving a positive outcome for all parties involved. It will be interesting to see how this unfolds and what the future holds for the rebranded exchange. Now we will read and comment on another interesting article. Securities and Exchange Commissioner Hester Peirce recently addressed the need for a crypto legal framework in the United States, emphasizing that not all crypto uses are financial in nature. According to Peirce, it is important to adopt a cautious approach and avoid regulating the technology as if every aspect of it is strictly related to finance. During her participation at Australian Blockchain Week, Commissioner Hester Peirce, who is popularly known as Crypto Mob, was asked about her stance on regulating cryptocurrencies. In response, she highlighted the necessity of developing a regulatory framework that doesn't automatically assume all crypto assets are financial in nature. Peirce further elaborated that while cryptocurrencies are often associated with financial transactions, they also have broader applications, such as facilitating interactions without relying on a centralized authority. She emphasized that these alternative uses, such as building social media platforms, should be considered when crafting the legal framework. Pierce advocated for a balanced approach, where the regulatory framework provides sufficient clarity to encourage experimentation while remaining adaptable to new applications of crypto and blockchain. She cautioned against creating rigid regulations that fail to accommodate the evolving nature of these technologies. In what appeared to be a critique of the SEC's current approach, including her own reservations, Pierce expressed concern about the sudden enforcement actions taken years after the regulations were put in place. She believes that the SEC can improve its approach and feels the need to freely express her views to effectively fulfill her role. Reflecting on recent incidents like the collapse of FTX and subsequent allegations of misconduct, Pierce advised the crypto industry to embrace self-regulation. She emphasized the importance of addressing counterparty risks, conflicts of interest, and leverage, stating that these are matters that industry participants should proactively address without relying solely on government regulators. In summary, Commissioner Hester Pierce emphasized the need for a reserved and adaptable legal framework for cryptocurrencies in the United States. She called for regulations that consider the diverse uses of crypto beyond finance, fostering innovation while addressing potential risks through self-regulation within the industry. This was the text of the article, and now we will be commenting on it. I completely agree with Commissioner Hester Pierce's perspective on crypto regulations in the United States. It's crucial to recognize that not all uses of cryptocurrencies are purely financial. The concept of a reserved approach to regulation, which allows for flexibility and innovation, makes a lot of sense. I appreciate Pierce's emphasis on the diverse applications of crypto beyond the financial sector. It's true that cryptocurrencies have the potential to revolutionize various industries, including social media platforms and decentralized interactions. By acknowledging these alternative uses, we can create a regulatory framework that accommodates and encourages innovation. I share Pierce's concerns about overly rigid regulations that fail to adapt to the evolving nature of crypto and blockchain technologies. It's essential to strike a balance between providing clarity and fostering experimentation. We shouldn't stifle progress by imposing regulations that hinder new uses and possibilities. Moreover, I commend Pierce for openly expressing her views and advocating for better approaches within the SEC. It's refreshing to see a commissioner who acknowledges the need for improvement and is willing to speak up about it. Crypto presents an opportunity for regulatory bodies to embrace innovation and rethink their approaches. I also agree with Pierce's call for self-regulation within the crypto industry. It's important for industry participants to take responsibility for addressing risks, such as counterparty risks, conflicts of interest, and leverage. While government regulators can play a role, the industry itself should proactively implement measures to ensure ethical practices and protect investors. Overall, Commissioner Hester Pierce's insights are valuable and align with the need for a balanced, adaptable, and forward-thinking regulatory framework for cryptocurrencies in the United States. Her views on the importance of embracing innovation and allowing for self-regulation resonate strongly, and I hope they contribute to positive developments in the industry. We are excited to share this information with you and create a community dedicated to financial growth. Let us know your thoughts in the comments as we continue to explore the vast world of finance together. Subscribe to our channel to stay informed and feel free to share and comment on all our videos. Thank you for your support. Attention! The information provided in this video does not constitute financial advice and is not intended to provide any form of financial guidance. The opinions expressed in this video are personal and may differ from those of financial experts. Any decision you make regarding investments will be your own decision. We do not intend to influence your decisions in any way. If you decide to undertake any investments, we recommend consulting professionals in the field. Before risking your financial capital, conduct your own research. Financial markets can be highly volatile, so if you choose to invest, do so with caution. It is important to be aware that financial transactions are often risky and can result in the loss of your entire invested capital. Never invest more than you can afford to lose. Past performance is not indicative of future results. Financial knowledge is essential. Be aware of your goals and abilities before investing. Conduct thorough research and verify sources before making financial decisions based on this video.